as many of you probably have realized by now, stablecoins and well, crypto in general is on the table of every single regulator and government around the world. So I'd like to mention 2 points on this slide. One is what are the perceived risks from institutions like the ECB, so the European Central Bank and Federal Reserve. And secondly, what type of regulations are on the horizon which could impact and basically affect the DeFi space. So firstly, in terms of perceived risks, the ECB qualifies that there are 3 main key functions for stablecoins. One is the interface, so the wallet function, one is the payment function, and one is the asset management function. Now, the ECB are primarily concerned with the asset management function. So, are they collateralized? Can you redeem them? What are they backed by? Do they offer a promise against the issuer? Are they audited? Are they regulated? What are they? And so on and so forth. So, regulators are really at this point trying to understand what stablecoins are. Should they regulate? How should they regulate? Should they regulate them all? What are they, most concerned with? So, as you all know, probably know, they are mostly concerned with fiat-backed stablecoins, and this is because of certain impacts which could overflow to the traditional markets. So, let's say there is a stablecoin run on a fiat-backed stablecoin. What will happen? All the underlying assets will need to be redeemed. So if you have a stablecoin, let's say the size of Libra, if it was ever launched, and it was widely adopted, and there was a stablecoin run for whatever reason, then all the underlying assets will need to be redeemed. So just to give you a concept of numbers, Libra, Facebook has about 2.4 billion users, so 10% in the EU. So if you had all, the 10% within the EU adopting Libra, and there had to be a stablecoin run, you're speaking about 10% of the assets inflowing and outflowing of the Eurozone. So it can have detrimental effects for systematic risk. And this is where it all started with the ECB and other organizations trying to understand what stablecoins are and if they should and need to regulate, because they could also be affected. There are also other risks. For example, if stablecoins offer a fixed value, and what happens if the value of the underlying asset goes down? Who will bear the risk? Will it be the token issuer, or will it be the token holder? Other risks, such as inherent risks. So if there are certain risks associated with the underlying asset, like credit risk and liquidity risk, then obviously these risks are inherently embedded within the token themselves. So these are things which perhaps are taken for granted, or just perhaps aren't really thought through when being adopted. So this is one aspect. So what are they doing about it? They've come up with a framework, and over here I'm focusing primarily on the EU and on the EU regulations, because we are in Malta, and because I cannot study all the regulations worldwide, because God knows what's being drafted right now. And basically, the EU have come up with a framework called MK, which is basically an EU directive regulating crypto asset service providers, which are basically all the players I highlighted in the previous slide, and issuers, so persons issuing tokens on the market. Now, the EU have thrown a couple of surprises at us. Some passed, some didn't, and there are more surprises probably to come. So, namely, that they first tried to ban proof of work protocols. Thankfully, that didn't go through, but that was a sort of wake-up call to we need more lobbyists, we need more education, we need more communication. Because if this thing goes through, it's going to affect everyone overnight. Secondly is the travel rule. Perhaps some of you have heard of it, perhaps not. But basically this means, so this is about a provision which was inserted, which basically means that any regulated centralized exchanges and regulated custodians which interact with unhosted wallets, such as MetaMask, will need to implement some sort of KYC. This isn't in force yet, but it will come into force. When I read that, I thought, how on earth is this going to be implemented? The legislators obviously have never interacted with DeFi or don't own unhosted wallets. Because if you think about it, and I've thought about it, I don't know how this can, in reality, be implemented. So that's the travel rule. Also, if you look in between the lines, there are some provisions in MiCA, which is a very, very, very long document, which even I haven't read every nook and cranny of this document. But basically, there's one important provision which is already there, which states that the EU would like to ban interest-bearing stablecoins. So basically, stablecoins issued in Europe will be banned from generating interest. Why are they doing this? So in my opinion, the ECB is strongly lobbying towards this insertion for competitive reasons. It is obviously more attractive for users to hold assets in stablecoins in accounts bearing, generating yield than of course holding all their money in the bank where they are losing money, especially in times of hyperinflation or hyperinflation to come. So I'm all for regulation. I am all for regulation because I think, you know, with what's going on with market manipulation, 75% of the hacks taking place in DeFi, there is need for some sort of oversight, for some sort of regulation. However, there needs to be some balance and there needs to be regulation which doesn't kill innovation. Because provisions like this, one, I don't know how they can be implemented, and secondly, endorse the monopoly of money and kill, you know, any source of free market or competition.